right now we're sitting at a 10-year yield of about 1.5, 1.6%. I still think there is some upside. And as long as there's some upside to that rate and it's not capped, we'll probably be in some further trouble for the tech stocks because they're the ultimate long duration asset. And so I would tell folks to circle up your best tech bets, but don't buy them yet.
So, I mean, we have to look at how tech's done over the last month, down 6%, but actually over the last week, it's up about 2%. We keep talking about this interest rate pressure. How come we haven't seen it over the last week?
Well, I think we've had quite a move already, right? The beginning of August last, we're at a 10-year yield of about 50 basis points. We climbed to 1.6% plus. And you think about that, even though that's historically on an absolute level still rather low, man, it has been a big shot in a very short period of time. And so maybe we're starting to see some stabilization. Maybe we'll get some relief, but I'm not betting on that yet.
One thing you are betting on are chips. You're very bullish on chips, which have not seen the same sky-high valuations as other areas of tech. Can you give us some names that you're especially bullish on and why?
Yeah, so I like the semiconductor industry within the tech sector because the valuations are more defensible, so less damaged by this spike in rates. And also the fundamentals are quite strong. We have supply constraint in most of the industry within the sector, but although that's not good for shipping units, it's very good for pricing, and pricing always trumps everything else. So I like my top pick in that space is Micron, MU, followed by a semiconductor capital equipment company, Kulicke and Sofa. That's ticker symbol KLIC. And then last but not least, I like NXP, ticker symbol NXPI.
All right, Paul, we're almost running out of time, but I know you've also been a little wary about the valuations of some areas of tech. When you took a look at a Zoom with forward earnings 150 times, are there some names that you're kind of thinking that after the pandemic might not show those same valuations or have the same strength?
Excellent question, Frank. Yeah, what we have to do as tech investors is we reopen the economy. We have to think about which of these tech companies that came to the dance over the last year just because of the theme of work at home, all of these COVID pushes, what is their growth rate going to be like afterwards? And so when you see things like DoorDash and Etsy and Zoom, you have to say, okay, they might be good companies. But man, their growth has got to slow after COVID. And I just don't know where the growth will stabilize. And you can't really buy those until you can solve that riddle.
Shepard Smith here. Thanks for watching CNBC on YouTube.